Welcome to the big show. This is Investing with Confidence. I am your host, Joshua David, and we are happy to have you with us today. As always, I do have my great friend, my great pal, and if you were watching the YouTube right now, you would see all the cups of coffee around here. What's going on with this, Al?
We have to stay awake during this show, Josh.
How you
Well,
doing
we
today?
really don't have a problem with that. It's exciting to do this. So the coffee's for after the show.
There you go. It's always great to be back, helping our listeners make better investing decisions, and that's a lot of
Hmm.
things we're going to talk about here today on Investing with Confidence, sponsored by Online Trading Academy. Is how average investors can potentially make better investing decisions, but do that with more confidence. We
Right.
have a lot going on with these financial markets. The markets were actually up this past week. All three indexes. The dollar was actually down. Oil was slightly down last week. Last week we were talking about how it had gained so much. I think
Hmm.
it was about 7% last week, potentially impacting the pumps for people. Gold was also up this week, so there's a lot of different things that are happening right now. Some are good, some are bad. But here's a good thing: good and bad. It depends on how you look at the financial markets. It's been a great week. A lot of people are missing out on these gains. Well, here's I want to talk about a little bit of something as well. Is the market is only up about 4% on the year. So we're
Right.
seeing a lot of big gains. We've seen some big days this week, and it's almost a little bit misleading because it just goes right back down the next day. So
Sure.
the people feel this euphoria and great things about these financial markets where it's kind of been consolidating. Are those some things to worry about? What's going on right now? How can we utilize these markets to make better investing
Yeah,
decisions?
they're not things to worry about, Josh. It's just how the market functions. It's a normal way that these financial markets have functioned and probably always will. Yeah, we see big up days, we see these big down days, but there's I think a lot of reason to be optimistic about this market going forward. We've got consumer confidence has gone up significantly. There's more money coming into the economy right now. That additional stimulus package was passed. So that money's going to be coming into the market. There's more vaccines now that are coming out, and more people are being vaccinated. So potentially less concerned about the coronavirus. Those are all things that are optimistic as far as the growth of the markets, the growth of the economy. I think the one thing to maybe watch out for are interest rates.
Yeah.
If inflation comes roaring back, if we have high interest rates, people might leave the stock market, for example, and move into one of the other markets, the bond market, for example. So there are a lot of things out there that are impacting the markets, both from an upside and probably more things upside wise now than downside. But it's important to always be prepared because the market's not going to telegraph us or give us a phone call and say, "Hey, I decided to go down tomorrow or
Are
next
you sure
week."
about that?
Well, so far I have not received a phone call like that,
Got
but
it.
actually we do kind of receive something. Because the markets really, not the markets, but the people that are moving the markets are really kind of telegraphing to us what they're doing. But I think the bottom line here, Josh, is that the lack of proper education has kept too many people out of these markets, out of the financial markets, and for the people that are in the financial markets without education, it's negatively impacted what they do. And there's hundreds of sources of financial knowledge out there. There's large sections in bookstores and libraries on investing and trading. There's newsletters, there's TV shows, YouTube, all sorts of things. But that's just knowledge, and knowledge is not what is going to give you the opportunity to take advantage of the markets. It has to be, in addition to that, the skills to use the knowledge, the right tools and resources to help you make the proper decisions, and then help if you need it. It's like when you take your car, when you buy a car from a dealer, you also have access to their service department. So if something happens to the car, you can bring it in and have it fixed. Same thing should be true if you're investing or trading. You need to have someplace to go if something happens you're not prepared for, or maybe you forgot about. You need to have a source of taking care of that issue.
You're exactly right. I mean, there's a lot of, like you mentioned, there is a lot of great things happening with the economy, the world. And it's just one of those things you always need to be prepared because the market is not going to call us. The market is not going to text us or send us a snap, is what the kids call it. So you have to be prepared for any market conditions because we know they go up, they go down, they also go sideways. It's
They do.
really been, I mean, quite frankly, almost sideways on the year. There's strategies for sideways markets, and it comes down to knowledge. But as Al is talking about, You need the skills to execute. You need the skills to utilize the financial markets and actually place your buys, place your sells, but where to get in and also where to get out. Al, we have a lot to cover here today. With this sideways market, the investors, for retirement, they're not seeing a whole lot of potential in their retirement accounts. So I want to talk about retirement techniques and strategies for sideways markets.
Mhm.
This is Josh and Al, Investing with Confidence. We'll be right back.